Hi everyone. National Bank is a proud partner of AccelerateOTT, and I'll try to make this corporate announcement quick so we can move on to the more exciting stuff. At National Bank, supporting entrepreneurs and empowering women in general is a priority for us, and we do this in several ways. In 2020, we signed the United Nations Women's Empowerment Principles, which promote gender equality in the workplace, marketplace, and community. Each year, our financial market sector awards bursaries to female students seeking a career in finance. This is a unique initiative in the Canadian banking sector. As head of National Bank's Technology and Innovation Banking Group, I'm proud to count on a diverse and talented team supporting the most promising private and public companies at every stage of their growth cycle. Shout out to Nick Raskazowski, who is here at the conference with me today. Every day, we work with innovators and disruptors like yourselves who are looking to boost their growth. I also sit on National Bank's Inclusion and Diversity Council, and closing the funding gap is very close to my heart. That's why I'm thrilled to present this panel, reuniting the best minds in impact investing, many of which I'm proud to say are our long-standing partners. In closing, I'd like to thank Invest Ottawa for putting together this great event, which is completely in line with our commitment to empowering women and supporting entrepreneurship everywhere in Canada. Enjoy the panel and the rest of the conference.
Great. Thank you very much. All right. I'm Jennifer Francis. I'm the chair of Capital Angel Network and on the board of Invest Ottawa and the founder of Sheboot. And I'm here with our VC panel this afternoon. With me, I have Janet Bannister, who's the managing partner of Real Ventures, Candice Matthews Bracken, general partner of Lightship Capital, Christophe Bourque, general partner of White Star Capital, and Judy Fairburn, co-founder and co-CEO of the 51. So welcome and thank you for joining us. So I'm going to start and ask each of you to give an overview of your fund and your investment thesis. So if we can just work around the room. We'll start with Christophe.
Sure. Thanks for having me. Happy to be on this panel today. Christophe Bourque, I'm a general partner at White Star Capital. We're a venture capital firm focusing primarily on Series A and Series B, based out of Toronto, Montreal, New York, London, Paris, and Berlin. Looking forward to the discussion.
And Candace?
I'll go next. Yeah, Candice Matthews Brackeen from Lightship Capital. We are a fund focused on supporting remarkable founders, so those from the BIPOC community, people who identify as women, those in the LGBTQ community, as well as those who have disabilities in 5 sectors. So consumer packaged goods and services, e-commerce, sustainability, artificial intelligence, and healthcare. We make seed stage and Series A investments.
Thanks. Janet?
Great. Thanks so much. Wonderful to be here. I am managing partner of Real Ventures, and our focus is on leading seed stage rounds of Canadian-based companies.
And last, Judy.
Great to be on the panel. I'm Judy Fairburn of the 51. It's been co-led and co-founded by Shelley Kuipers and myself, also Alice Reimers as co-founder, and an amazing team. The 51 is a Canadian headquartered financial feminist platform and venture fund. And what we've done is hold investors, entrepreneurs, and those that aspire to be for democratized access to women-led capital for women-led ventures. We've got a global community over 15,000. And then since 2019, we've activated 16 million of women-led capital. And in particular, in our Fund 1, which closed earlier this year, we have over 100 engaged Canadian LPs, 90% of whom are women across multiple sectors and backgrounds. So we're really working at both unlocking the underestimated in terms of founders, as well as unlocking a new investor group. And focused in fintech, health femtech, food and ag tech, in e-commerce, DTC, and happy to talk more about some trends there. Thank you.
Great, thank you. All right, so let's get into some questions. So 2021 is shaping up to be a record year for VC investment. And as we've heard from a few of the panels earlier today, women are not exactly sharing completely in that, as the proportion going to women has dropped from 2.8 down to 2.3%. So I'm going to do this in a two-part question. So the first one is for Christophe and Janet. As we go through this pandemic, what changes have you seen and experienced in the investment landscape, and how has it changed your approach to investment?
Jan, do you want to kick it off?
Yeah, sure. Thanks so much. So I guess I would point to a couple of things. First of all, what we have found is that investors are very comfortable making decisions without meeting people face to face. They're absolutely doing it via video. And what that means is that the decision process has increased significantly because you could cut out all the travel time. People aren't trapped. So for founders, they don't need to travel to meet people. For partners, if they need to get together to make a decision, most of the time people are around, they're not off traveling. So as a result, the decision process has accelerated. And the window from when we first see a company to when we need to make a decision has really shrunk. So that was one thing. I think the other thing is there has been a tremendous growth in the amount of capital. Just to give a stat, if you look at the first half of this year, first half of 2021 versus first half of 2020, in Canada, we have seen a 4x increase in the dollars invested in Canadian-based tech companies. And for perspective, yes, the whole entire industry is strong. Globally, it's up 2.4x. In Silicon Valley, it's up 2x. So yes, globally, huge increase in amount of VC invested. But as I said, Canada's up 4x, so it is growing even faster. Within that, just some stats is what we're seeing is most of that additional capital is being invested at the later stages. And so, for instance, in terms of, there's been a lot of press, I'm sure everybody's seen the news, like, hey, valuations are going up, round sizes are going up. What we see is that is primarily happening at the later stages. So again, just to sort of give us a quick snapshot, if you look at the average round size for a seed stage company in first half of 2021 versus 2020, both are 2.0 million. Versus if you take something like a later stage, that has gone from 23.9 to 59.2. So again, significant, more than doubled. And similarly, other stages, at the later stages, we're seeing tremendous growth. So those are a couple of things that we're seeing. Christophe?
Yeah, I would agree with everything Janet has said. We're definitely seeing that. Long story short is competition amongst VC funds is through the roof. The barriers to entry in terms of being able to meet founders and look at investment opportunities have diminished substantially as investors have become comfortable, meeting people and doing due diligence remotely. And so we're kind of adapting to that newer environment. And of course, trying to be careful as well, not to get caught up in the increased valuations, which, as Janet has said, have substantially increased, especially kind of a Series A, Series B. It's definitely something that we're tackling at the moment, notably in markets like the U.S. and in some places in Europe, and Canada as well. Actually, the way that we're tackling this issue is frankly just by not changing our approach. So, our firm, I have partners in every geography where we invest. I don't think we did about a dozen deals, a dozen investments since the beginning of the pandemic. I think only one of those was in a company that was founded by founders that we didn't already know. And our approach has always been that way. And I think many venture firms have this approach where, you get to know people over time and you build conviction. It's all about team at the end of the day. And that's what leads to the investment decisions. Now, if the pandemic, were to draw on for, many years, then of course, this would have been a lot more difficult. But many of the places where we invest, things are open, people are meeting, and things are kind of slowly getting back to normal.
That's pretty exciting to hear things are getting back to normal, and I look forward to our SheBoot founders getting their 59 million second raises. So for Candice and Judy, you both raised your funds during the pandemic, which is amazing. And how has that shaped your approach to investing?
Yeah, so I started fundraising pre-pandemic, and am getting closer to kind of finishing things up. So we started our fundraise in February of 2020. And then we closed the office on March 12th. And I thought, well, this is absolutely it. This isn't going to work out. This is never going to work. And I really just found completely the opposite. What we found was people in their living rooms with their children or their pets or their partner kind of walking with their pajamas on, and people were really comfortable. And that level of comfort, I think, allowed all of us to have better conversations. And I think the people that I was able to meet, kind of during the pandemic I'm really close to. And I have gotten a chance to meet some of them in person now that things have opened up a tiny bit more and then closed up and then opened again. And so it's been actually pretty incredible. I think we've met more people than we could have ever done. Because I think pre-pandemic, everyone was trying to travel. Every LP wanted to meet in person. And that has been just completely the opposite of what we've found. We've met with bigger funds than we ever thought we could. So it was, it has been an incredible experience for us.
And from the 51's perspective, I'd echo many points. In fact, we're a fully virtual organization, and the pandemic's really propelled us. We were, independent, directly investing in some SPVs before it. And then I think one thing that's made the big difference is Shelley, again, co-CEO with myself, took the initiative when the pandemic hit in March to wrap arms around the founders that we had invested in already. And I think that's made a huge, huge difference. And then, got started. And again, she led the starting of it continues to this day, our Friday noon Eastern Instagram TV show, which would feature founders, incredible people from across the globe. And so we really got going on community in addition to the capital and investing. And so I think geography is not a barrier anymore. So again, we're over 15,000 in terms of our global community now, and over 100 investors across Canada, a whole bunch of them who we've never met personally. And so indeed for you, to me as well, it has actually been a real propellant. And just to close, of the 14 firms that we've invested in, we've only had less than a handful we've met in person as well. There's a lot of trust. I think, as you said, you're very authentic. The conversations flow. I think particularly when, it's women or other founders, diverse founders coming into our group, they feel very safe, and we get to the key conversations right away. And we're so pleased that 3 of the founders we're invested in are on today's conference: Virtual Gurus, Soma Detect, and High Ivy.
Yeah, that was pretty exciting.
Very much so.
Yeah, and I do wonder, the silver lining of the pandemic, getting to do your meetings and invest your money in your pajamas with your cat. So, Janet, you're, I think, the first managing partner of a major fund that's a woman, and Candice and Judy, you've both started your own women and minority-focused funds. So I want to ask you, what impact do you believe that having more women on the investment side of the table makes within our investment landscape?
Yeah, so maybe I'll go first and then turn it over to Candace and Judy. So, the data is clear that, there's numerous studies from Harvard Business Review, Fast Company, Entrepreneur, Bloomberg, Kaufman Fellows that show that women VCs invest up to 2x more in female founders. So, that's quite compelling. And there's also all sorts of data that shows that diverse teams and women-led companies lead to higher returns. Everything from, private tech companies led by women deliver 35% higher ROI, 12% higher revenue than male-only teams. So, I think hey, that's great. But I think, the more important question is, okay, why is that? And even more important, how can we get more female investors to the table? And how can we help, to the extent that there are all male investing teams, how can we help them invest in more women? And so, I think those are the key questions. And I think, what is the solution? I think part of it is, as I said, getting more women to the investing table. The great thing is that we are seeing a lot of LPs. So these are the investors into funds that are increasingly requiring or expecting that the fund have a balanced partnership. So I think the fact that it is coming from the people who write the check into the funds, that is very good. I also am seeing more women who are being hired by funds. So that is good, certainly more than 5 or 10 years ago. At the same time, we still have a room to go. There's still opportunity there to further increase it. I do think that there is a significant network effect where the more that female founders get funded and are profiled, the more likely that everybody will invest in them, right? And it's just, it's that whole, inherent bias. It's that you recognize things. And, I applaud, there are several media outlets that are going out of their way to make sure that they are recognizing female founders, which is great for everybody in the ecosystem. It's great for female founders to have people to look up to. It's great for all investors. So I think that those things are very positive. But I'll turn it over to Candace and Judy, who I'm sure can add more.
Yeah, happy to, well set up as usual, Janet, terrific. And I think the business case is there in terms of overperforming. And the flywheel effect, indeed, is what we have seen. And the 51 is fundamentally focused on the democratization of investing. And as mentioned earlier, and we're so proud that in our first fund, 30% of the investors had never invested in venture before, an incredibly qualified group of accredited investors, in terms of all different backgrounds. And, we work to make it accessible for them to come in. And I think this is particularly important when we talk about, if you refer to OECD's 2019 report, Under Pressure, the Squeezed Middle Class. We need to make sure our millennials have the opportunity to be able to build wealth and to be able to get into private companies. And I think in Alberta, with the eligible investor and self-certified, growth beyond accredited investors, that's very important. Investing small amounts is fine. Our first fund, you could come in at 15,000. Because what I think is also critical is to crosswalk this with, when you get involved and you're more active in your investing, you build financial and commercial acumen. And so for women, I think that's particularly critical to advancing them, us as leaders, entrepreneurs, board directors, and more. So it's very synergistic. If I could just take one more moment, I think one of the key things to making this happen, though, is accessible education. And because many of us want to be informed before we jump into early stage investing. It's risky, right? And you're going to do a small part of your portfolio, granted. And so, we're happy here with the 51, University of Calgary, the Canadian Women's Foundation. We launched last year the Financial Feminism Investing Lab, earlier this year, really. And our second cohort starts tonight. Fully virtual, people from across the country, women, non-binary, participating. And I think it makes a really big difference to being able to feel informed to take that leap as an accredited or soon eligible and self-certified investor to invest.
Yeah, not much to add to these two ladies here, but in my part of North America, the Angel Capital Association back in 2019 put out a study saying that a woman who, as an angel investor, her portfolio typically had 70% of her portfolio companies were women-led. And today, if I look at my own fund, we've made our first 11 investments. 70% of the investments have a woman in leadership and on the founding team. And maybe that's because our investment committee is 2/3 made up of women. And so it really does matter that we are able to look and vet companies with a diverse set of ideas. And I'll give a tiny bit of a story. So back in 2018, I was trying to kind of like hone my skills as a med tech investor and really looking at more biotech, and attended a conference, which was a biotech showcase. There were more men named Mike than women at the conference. And I was able to listen to this young lady who had a progesterone test. You could check your progesterone with urine. And there were 70 men in the room or so, and me. I was the only woman in the room. She pitches this idea, urine test, first of its kind in the world to check progesterone. And not a single one of those investors wanted to talk to her. Fast forward to today, we were her first investor. She just raised a Series A from a really large diagnostics company. She's making millions of dollars and is in big box retailers. It matters that we are looking at ideas that need to be solved, challenges that need to be solved for women, challenges that need to be solved for diverse communities. It matters that we diversify what we are all looking at. And that starts with making certain that women are in leadership positions.
Yeah, that's so important. And we saw, on the stage today, both in the panels this morning and the SheBoot founders, just how many are in femtech and how important it is to have investors that understand the problems that they're talking about. So as we look at, practical advice, we've got a bunch of founders, I was going to say on the phone, but I guess on the platform, listening to this. And, what guidance or advice would you have for them on how to start looking for investment? How should they reach out to you? What should they do to get started? Christophe?
Yeah, sure. Happy to start this one. I think one of the important things, and I think different investors have different views on this, but, my view is that, fundraising is not an event. It's not a thing that you do every 2 years. It's just a constant conversation and dialogue that you have with your potential investors. I know some investors say, don't go to market, don't talk to VCs until you're ready. I think that's terrible advice. I mean, especially those of us investing, seed, Series A, there's nothing perfect. And we know that. And, the data is not going to be perfect. The unit economics may not be perfect. The go-to-market may not necessarily be crystal clear. And that's okay. And I think having this open dialogue with investors along the way, of course, pick the moments in time that, where you can show your best foot forward. But always be having this constant dialogue. So that's the first thing I would say. The second thing I would say is when you show up to that meeting or that catch up, whether it's on Zoom or in person, be ready. Show that you really have full control of your business, that you know the data, that you have the dashboards, that you know your KPIs, and have those up, on the screen. I can't emphasize that enough. I mean, too many founders show up for these catch-ups, and there's always a casual element to it, but sometimes it can be a bit too casual, and it can just be unprepared. And if I ask a question, it'd be great if the person had the data and the KPIs kind of ready to answer it, right? And that's what we look for. We look for people who are in control of their business, because at the end of the day, we're backing people, right? And being able to show us and to be able to help us build conviction in your ability to execute is by far the most important thing. And so I'll leave it at that.
Great. And then thanks, Christophe. I'll just add something else to that. I would say, agree with Christophe to get in front of investors early if you can. It's often been said it's easier for an investor to invest in a movie rather than a photograph. I see people, how they are developing over time. That being said, I think once you are ready to invest, where you're like, hey, you know what, I am ready, or not ready to invest, ready to raise money. I think the most significant advice I would say is run a process. And what I mean by that is have your deck ready, have your storyline, have all the data, identify which firms you're going to target, know why you're going to target them, and within each firm, know which partner or senior or principal or senior associate you're going to speak with, and then go out and within a week, go out to all of them. What works, and then you can move everybody along the pipeline. By contrast, what does not work as well is when people say, what, I'm going to start with a couple, I'll see how that goes, and then maybe I'll reach out to a couple more, and then I'll reach out to a couple more. And the problem is that drags it on. And you can, what you want to do is you want to have it a consolidated, tight process, so that to the extent that you have more than one VC at the table who wants to invest, that they're all there at the same time, and you can select which investor, or you can run you can have different investors co-investing into the same round. I think the one other piece of advice I would give, because I know this is generally a female audience, is be bold. Investors want to invest in big ideas, and there have been studies done that show that women, if presented with a job opportunity, like let's say it's 10 criteria, if women meet 7 of them, they will say, I'm not qualified. And if men meet 3 of them, they will say, hey, I'm good to go, I'm qualified, right? And so in women also and this does not apply to everybody, right? There are exceptions for men, there's exception for women. I am just talking generally in terms of the broad picture, that women generally tend to want to under-promise and over-deliver. And where I have seen that play out is where I have met with female founders, and they will have these projections. And I'll say, hey, that's fine if that's what your business is going to do, but you're not growing fast enough. You don't have enough upside to get VC funding. So, you could go out and get other funding, but if you want to have VC funding, you're going to have to find ways to grow faster. And more often than not, when I talk to female founders about that, they will say, oh, I think we can grow much faster. I'm just trying to underpromise. I'm just trying to be conservative. And so what I would say is, don't be crazy. Don't be unrealistic, but it's okay to be aggressive and have aggressive plans for your business.
Superb point that I'll just build from. The 51 likes to focus on storytelling. Shelley is really championing this. And I think when founding team shares that motivation of why they started their business and the passion that's behind it in terms of the problem they want to solve, and and where they of course are getting early customer pull and ideally early revenue to do that, but to show that passion and the why, that shows that and gives us confidence that they'll have the resilience through the inevitable lows. And I think many in the audience today who are entrepreneurs know that it's not easy to be an entrepreneur, not at all. And so, to know that the founders have that, passion for it, that belief in themselves, that get it done attitude. And I'd say like the 3 founders that were on earlier today, all are an example of women-led companies that we think do this really, really well. And just a quick aside, the 51 is 100% invested in women-led, co-led companies. And it's really critical as well to us that women are equal on the cap table. Our women diverse founders are equal on the cap table, because that sets at a very early stage this foundation that this truly is a diverse company that's going to build from the best ideas. And one of the things that I would just say in terms of the one further thing on the do's is, you got a great concept. Do speak about your customer testimonials and what your early revenue is. I say that particularly with those that are more science tech-based founders, because we're trying to invest in a business that will grow. Secondly, always have an ask. Don't finish open-ended. Know what your ask is and what you would like to use the money for, and how, what your milestones are and your objectives, and map that out. And then after that and the like, so investors can see that path that they're excited to join with you. And then finally, in terms of a don't, it's been heartbreaking to sometimes see founders that have given away too much of their company at the outset. And I think women sometimes are particularly prone to this, because they sort of, as you've mentioned, Janet, there's some underestimation that goes on. And be very careful on that. You need to have a strong maturity of the ownership at the beginning. Otherwise, you've created an uninvestable company.
And then Jennifer, I think I'm going to get back maybe to the original question. Was it about getting women into investing?
It was about what you would recommend to get investment.
To get investment. Okay. So
Yeah.
yes, absolutely. It's all about, for me, relationship building. And I kind of treat it like breakfast, lunch, dinner, dessert. So, so you have breakfast with someone or a coffee, you're getting to know someone over time. Sometimes this is over the course of weeks. Sometimes this is over the course of months. Sometimes you don't get an investment for a few years, but you're constantly going and kind of curating that relationship. It's very rare that anyone is getting an investment on day one, unless you're in these kind of very interesting pockets of North America where people are begging to get into rounds. That just doesn't happen everywhere. But I believe that it really just takes curating relationships long-term to get there, honing that business model and really telling the story. I think sometimes, people that look like me, especially women, we struggle with telling the numbers and not so much the story. So as an investor, I want to know what the numbers are. I want to know how I'm getting my money back for not only myself, but for my LPs. That's what this is about. And so how can I get to, and really you could even ask an investor, like, how much are you looking to return from the fund for my company? I know what that number needs to be ahead of time. And so maybe finding someone who is a VC that's a mentor, that can really teach you the tricks of the trade could be really important. But I think it really starts with building relationships over time.
So I guess related to that, we have a question on the platform around, setting a closing date for a round. So if I'm not going to get the investment based on my first meeting, should I be coming in and saying I'm looking to close in a month, looking to close in 3 months, looking to close sometime?
So I'll jump in. I think it's very difficult to drive that. I think you say, hey, we're looking to, I think the best response is we are running a process and we are looking to close as soon as possible, but we want to find the right investor. I have seen where some companies will shoot themselves in the foot because they will be too aggressive and timing. And, as much as I say, hey, be aggressive with your business, that's great. But I have seen specific cases where a founder came in and said, we've got other term sheets on the table. We're closing in 2 weeks. We tried, and so we were like, okay, tried to rush it through. It was too rushed. It had to go back to the founder and say, actually, I'm sorry. We can't make it. We can't make it on that timing. We're going to have to pass. I then found out that actually he didn't have 2 other term sheets. And I was just like, and he would have waited longer. And I was like, you know what? We would have invested in that company if we had just been given another few weeks. So, just always be honest and transparent. And yes, you want investors to move along, but don't give false deadlines. Never say you've got term sheets. When you don't have term sheets, it can backfire, always be. So that's what I would say on that one.
All right, I'm going to ask each of you to go through. So I'm sure you all see hundreds of proposals and pitches and intros. So what advice would you give to founders to stand out from the pack, catch your attention? All right, someone needs to go first.
Yeah, I mean, for us, a founder that both has experience as an entrepreneur and is really tackling a problem, pain point that needs to be solved, that they have personal conviction on. The two of those together makes a huge difference. And, and that they've done their homework to say, this is from the ground up, this is the market that we can capture.
Yeah, for us, it's traction. I love to see that someone has gone out and figured out product market fit. Maybe it's not exactly where it needs to be, but they've gone out and tried to sell it. It doesn't work in some sectors, but in most sectors it does. You can go sell what you're doing. It can be really ugly, but you can at least try before I put my own money in. So I don't want someone to learn on my burn. And I'd like for them to learn on their savings or their side job or something like that before they get to me.
And I'll say, I think what we value most is just hustle and drive and overcoming obstacles. You know, there will never be a straight line to success. There will always be challenges, and having seen a founder who has overcome those challenges. So I'll give a piece of advice and then a specific story. But one thing I think that founders sometimes when they pitch, they try to gloss over all of the hurdles that they have faced and all of the challenges and all of the things that they tried that didn't work. And I would say, don't hide from that. That is amazing. I want to know that you have persevered, that you tried 5 different things, because that means you're smarter because you found out 5 different things that didn't work. And so I think that hustle, that drive is most important. You're investing for the long term. I figure, hey, if you're smart and you're driven and you got hustle, you can learn things. But if you don't have that hustle, like nothing's going to make up for it. And to give a specific example, there was a company that we were thinking about investing in. The investment team was split. And so I said to the founder, hey, you got to hop on. I'm going to have a one-on-one call with one of my partners. The partner was in Montreal. The founder was in Toronto. I said, he just wants to talk to you for half an hour because he has a few more questions. This was in the middle of the winter. So what does the founder do? He hops on an airplane and flies to Montreal in the middle of a snowstorm and shows up at the office in person. And I just thought, okay, there's someone who has hustle. He's told that he has a half-hour call, and he's basically like, no way I'm taking a phone call. I'm hopping on an airplane, and I'm showing up at the guy's office. Of course, that was pre-COVID days. We ended up doing the investment. The company's awesome. But that's an example now. You know, you may not be able to do that and know that even if you show up at the office, they may not be there today. But it's an example of demonstrating that hustle.
Maybe just to add to all that, I think founders need to be very, very thoughtful about who they pick to be their co-founders or who they add to their team, and they should be putting that team forward, you know, as much as possible. And what I mean by that is too often, you know, I'll meet with a founder with a great idea, great, you know, founder market fit, but you know, the team is friends, people that they know, not necessarily folks that come across as being, you know, really world-class operators with you know, fantastic resumes and really, really high caliber, you know, people. And so that can be a little bit dangerous because, again, at the end of the day, we're looking to back teams, we're looking to back people that we can build conviction around them being able to execute their plan. And so even if you as the founder and the person with the idea maybe don't have that, you know, 10 years at McKinsey or that former exit, surround yourself with people who do, right? And who can help you get there. And so I think that's super important. And when I think of all the pitches that I see, you know, in New York, Toronto, Montreal, the biggest thing that we talk about after those meetings is the team, is you know, how do we feel about the team? How do we feel about the people? How do we feel, you know, about you know, the opportunity that they're going after? But that's 80% of the discussion. And so for all the founders that are on the line, think very carefully and make those hard decisions early, and make sure you're building, you know, the team for the future.
Great. So just to go through them, we want a thoughtful hustler with a great team that has a wonderful story, knows their numbers, and can show traction.
Exactly.
All right. And Judy, you've got something to add.
I remember something I heard about 20 years ago that stuck with me so well, just to encapsulate this as well, is invest in an A team, even if the business model of technology is B. Don't do the reverse. Because you need a team that, you know, to both everyone's points, is going to pivot well through all the inevitable ups and downs.
Well, I'm sure all my investments got it right the first time, but yeah. But yeah, I do appreciate sometimes you need to pivot. All right, so I want to thank the panel for your insightful comments, and I'll move it back to Sonia. No, Shav. I'm handing it back to Shav. Thanks very much.
Thank you so much.
Thanks, everybody.
Thanks, God.
Bye.
Okay, can you hear me? Yes, amazing, Jennifer. Thank you to all the panelists. Again, Jennifer, you did a really great TLDR about the ways to set yourself up for success, so I won't go over that. But again, seeing those themes of the importance of storytelling and being bold, not underestimating yourself, coming through again from an investor's perspective. I love some of the messaging around it's time to democratize investing. We need to create accessible education to demystify this space. Loved this insight. People from underrepresented communities are creating businesses that matter. Having more women, racialized folks in leadership on boards as investors can enable those crucial businesses to scale and stick around for the long term. I think that that's really ingrained in my brain. Always have an ask. And don't give away too much of your company, early on. So those are just little things that I picked up. I'm very excited to introduce Susan to the, oh, there you are. I couldn't see you over there. Susan Richards. Susan is the co-chair of Invest Ottawa and Bayview Yards and founder and managing partner of Number Crunch. And she will be hosting our keynote. So enjoy. And yes.
Thank you, Chef.
Before I say that,
Yeah.
make your way to stage 1. And if you're in the building, just move around. Get that blood pumping.
Stage 1.